Currency markets breathe a sigh of relief as the US and EU reach a trade deal. The euro was on the rise this Monday morning after President Trump and EU Commission President Ursula von der Leyen announced a trade deal that sets a flat 15% tariff on EU goods. The EU was also promised to invest about $600 billion in the US and buy $750 billion worth of American energy. Jeremy Stretch is Chief International Strategist at CIBC. Jeremy, the market seems relieved, but is it the best it could have hoped for?
Well, I think after the Japanese trade deal, it appeared that the 15% threshold was likely to prove a template for other trade deals, and that seems to be the case here in the European Union as well. So you're right that we did see a little bit of early relief in terms of the euro, but it hasn't really been sustained, as I think markets are now underlining the fear that, of course, this leaves the European Union with a worse trade position than they had prior to April. Now, of course, that was almost inevitable. But I think there are other concerns in play, not least in which the biggest individual export sector for the European Union into the US isn't autos, it's actually pharmaceuticals. And they are, of course, still at risk of Section 232 tariffs in the next couple of weeks. So yes, the news headlines are relatively positive. It's a least worst outcome. But I think there are still plenty of caveats, not least of which is the issue about that energy purchase, because, of course, can the European Union really ramp up its energy purchases to meet those lofty demands as well? So there's as many questions as answers as there are in relation to this deal.
Shouldn't this be more positive for the dollar, Jeremy, given how much energy Europe's promised to buy and how much it's promised to invest in the US?
Well, of course, this is another extension of the sort of the trade narrative that the US is encouraging its counterparts to invest more in the US. And so ultimately, if we were to see significant net inflows, that would be potentially positive for the dollar, in the same way that obviously if we were to see that magnitude of energy trade being manifested between the two sides, because I think the European Union currently buys around 80 billion of energy from the US currently. So to ramp it up to 250 billion over the next 3 years is a very substantial increase. And that would be a net flow into the dollar. So in that context, there is a degree of dollar resilience, but I think there will still be some question marks as to whether those lofty numbers will be attained or will be achievable.
It's also a busy week ahead with a Fed decision due, but markets still aren't pricing in a move anytime soon, are they?
No, they're not. And I think the context of this week's Fed decision will not be in terms of whether there's going to be a rate change or not. I think that's almost inevitable. There will be not. But I think it will be the issue of how many dissenters will there be to that decision. One notable dissenter could well be Christopher Waller, because, of course, he's perhaps auditioning for Jay Powell's job. But also, of course, we get the opportunity for Jay Powell to push back against the pressure from the White House in the subsequent press briefing. Now, we don't get any updated summary of economic projections at this meeting, but I think the Fed would say it's far too early to consider policy easing at this juncture when there are still a number of uncertainties, not least in which of when any tariff-related impacts will come through into prices. So it may be the case that Jay Powell is going to continue to face significant criticism of the White House, and I think that's going to be an inevitability between now and him stepping down. But I think markets are relatively relaxed that this week's decision should pass by without incident, albeit one suspects that Mr. Trump will no doubt inevitably put something out on Truth Social pretty soon after the event.
How relaxed are the markets, do you think, about that threat to the Fed's independence?
Oh, I think it is a real and residual threat. So even if Jay Powell says that he's going to remain in situ until the end of his term in May next year, I think there is obviously a concern that whoever replaces him will be a Trump appointee, but who will be doing the White House's bidding in terms of policy. However, we shouldn't lose sight of the fact that the Fed chair is just one of the 12 individual voters at each respective meeting. So it isn't necessarily a first amongst equals, but the mere fact that the Fed's independence is up for discussion, I think, is one of the caveats which has really been compromising global investor appetite for US assets.
Do you think, though, that sell-off we've seen this year in the dollar and other US assets will start to reverse, especially as the trade situation seems to be calming? The Trump administration has made a few deals now.
Well, yes, there have been deals done, and that's relatively good news. That will alleviate some of the pressure points in terms of the global economy. But I think the question is, how much of an inflationary impulse are we still going to see in the US? How is that going to translate into Fed performance? So there's an uncertainty in that regard. But I think more importantly, it's more about that unreliability as both a trading partner and also as a defense partner, which, of course, we shouldn't lose sight of in terms of the issues in relation to NATO that have been bubbling under the surface as well. So I think that has led investors to sort of certainly change their narrative just a little. And I think in the context of US assets, where it has been the case that many of those assets have been unhedged because the presumption was that the dollar would remain firm and it wasn't necessary to hedge them, I think the hedge ratios will change, and that will accordingly act as a further sort of headwind for the dollar. And despite the US administration saying they like a stronger dollar, ultimately they're quite happy to tolerate a cheapening dollar if that helps to benefit the export spectrum.
That was Jeremy Stretch of CIBC. Don't forget, you can watch more videos on Reuters.com.